What is the stock market? It sounds confusing, but really it's quite simple. Basically, you purchase a stock or a share of any company. You then become a shareholder of that company. You can buy as many stocks as you want and sell whenever you want. The stock price of companies fluctuate constantly. They'll either go up or down, so you can sell it when the stock goes up and make a profit. If you hold on to your stock, certain companies pay dividends. For example, every quarter that you own one Apple share, you will be paid 82 cents since you are technically a partial owner of the company. That's just a quick overview of the stock market. Obviously, there's a lot more that goes into it that I don't quite have the time to get into. I had the chance to sit down with an entrepreneur who's a perfect example of why young adults should get into investing at an early age.
My name is Zach Bergstresser. I trade stocks. Yes, I am currently 76% above average for the traditional index trading.
What does that mean? Well, I asked Zach how he was doing in the stock market, and he said he's 76% above the traditional index. Basically, at the age of 18, he is making 76% more than the average person does in the stock market, and he's only 18.
When you buy and sell stocks, there is a risk to it because it's almost like gambling. If you put all your money into a slot machine, you could win some, you could lose some. You can set stop losses to help with the amount you would lose if it dips down. But I won't recommend it to everyone. I would make sure they know what they're doing and do research into what they want to buy.
If I wanted to get into the stock market, is it easy?
Not necessarily. Trading stocks can come with a risk. You need to know a lot about the company and do a lot of research, and unless you understand that, I won't recommend it. The stock market impacts my life because it helps me pay for things that my normal job doesn't always cover. Like I can go out with friends more and have that pay for it instead of it coming out of my job salary. I like to buy the EV sector, which is electric vehicles such as Tesla, FSR, NIO, and other companies like that. Also recently, weed stocks have been doing well.
Wait, you can invest in weed? Well, yeah. There are companies that sell recreational marijuana, and because recreational marijuana is becoming more legal in more states, the stock value of those companies are going up.
My investing strategy is buying and selling swing trades. So as of now, I'm in 9 different companies, such as Tesla, FSR, and other stocks like that. And I'm waiting for a certain price target to hit, then I'm going to sell it, then look into new stocks to buy with the capital I gain. I've made a substantial profit from what I do, and I'm glad I do it. It's a great second stream of income. COVID-19 has affected trading stocks because the stock market is a lot more volatile than it has been. You can get new news coming out and it would either shoot up the stocks or it can crush them. Every time there's an election, stocks are a bit finicky because there's a new change in government. So some go up, some go down. It all depends on what sector you're talking about. I keep track of my stocks through my Schwab account, and I also look at Yahoo Finance and Seeking Alpha, which are great tools to help me manage my stocks. Schwab account is my investing account. They're the company that I manage with, and they allow me to buy and sell the stocks that I'm interested in. The stock market's a great thing to get into. It's a great second stream of income, and it allows you more freedom with the life you want to live. I'd say I spend about 10 to 15 hours a week on looking into stocks because it always changes. There's always new news coming out, and it's a very hands-on thing. I'm always going to stay into stocks. I'm just going to broaden my investing portfolio by having rental properties and do some real estate stuff as well. Make sure you do your research ahead of time. Don't jump into something you don't know a lot about, but it's a great way to broaden your incomes.
We got a lot of great info from Zach about the stock market and why he invests. I also got to interview a teacher at Seneca Valley who teaches personal finance. I asked her a lot of questions about why young adults should start investing.
Hi, my name is Mrs. Kafalis. I teach personal finance and pre-calc trigonometry. I think that young adults should definitely get involved with investing in a young age. They have a lot of things that older adults don't have, and one important asset that young adults have is time. To invest money, there is a time factor. It's not about getting rich quick. It's about making wise decisions, cutting back on our spending so that we have extra money in our budget to invest. But it also takes time. It takes maybe a couple decades of perseverance and diligence, and learning as you go and constantly improving. So you need to do that over the course of sometimes 20, 30, 40 years. Well, nobody ever thinks they're going to be old, but you are someday, and you're going to want to retire someday. And you're going to want to have the resources and flexibility and freedom to retire someday. No one ever thinks it's going to happen to them, but it does happen. And to live comfortably in retirement, we got to start investing our money early. The benefits of investing at a young age are definitely time. Now, younger people may not have big salaries at their age of life, but they hopefully will keep growing as we get older. But you guys have time. Young people may not have all of the answers and experiences that an older adult might have, but nobody knows all the answers. And the best way to do this is invest when you're young, plan ahead for retirement because it's going to probably happen for you. The time is what builds your investment. And young people don't have a lot at risk right now. Here's what I mean. I'm older, I have a family, I have a spouse, I have a mortgage. I have a lot on the line where young people are likely not to have too many obligations right now. Not many people are relying on your income right now. So why not take a little bit of your income and just try to invest, learn as you go. That's the best way and sometimes the only way to learn. Well, it's very intimidating to start investing at a young age because we don't know where to begin. We just don't have a lot of knowledge and experiences yet. But personal finance and learning how to invest is like a lifetime learning opportunity. So I would think at a young age, the best thing to do is maybe start a Roth, ROTH IRA.
Mrs. Kafalis said to invest in a Roth IRA. But what is that? A Roth IRA is an individual retirement account. Let me explain that real quick. Basically, you get a paycheck and you pay taxes on that. You can then take however much you want from that paycheck and put it into your Roth IRA. Every year, that money will increase around 7 to 10%. Once you are above the age of 59 and a half, you can then withdraw all that money completely tax-free since you already paid taxes on it.
And go in with the mindset that you're not going to be rich overnight, but you want to develop patterns and strategies, and you want to be able to hold back and continuously fund it. And maybe in the beginning, it's like hardly any money, like $20 a month. But as you learn more and more about your Roth IRA and get started, you're going to naturally want to put more money in it and make better financial choices so you have extra money to put in that Roth IRA. So my best thought would be a Roth IRA. Another great investment for young people might be to drive to the bank and open up a CD.
Timeout. What's a CD? Well, a certificate of deposit account is basically just a savings account with some minor differences. Basically, you put the money into the account and you lock it away for a certain amount of years. The more time that you have it locked away, the higher the interest rate is. Once that time is up, you can then take all of that money out, along with the money earned from the interest rate. So it's the same thing as a savings account, but higher interest rates, and the money is locked, so you cannot get it.
They're very low risk, but they don't pay a whole lot in interest, but they will pay better than a traditional savings account. And another thing, why not the stock market? There's probably been, I would think the best stock investor started with probably just as much knowledge of the stock market as you and I have, because they learn as they go. So you got to start somewhere. Don't invest a lot of money, but get started. Only invest as much as you're comfortably willing to lose, because there's never a guarantee that you're going to make money on an investment. Well, because I'm a lot older, I've learned a lot throughout my life at different phases of my life. And when I was young enough to be working but still living at home, my dad actually basically took me kicking and screaming to talk to a financial advisor. And because of him, I started a 401k. So I have a 401k. I love tinkering with the stock market. I don't plan, my attitude about the stock market is I'm not planning on being rich. That's gambling. But I am planning on picking a certain percentage. Like if the bank pays you 1%, maybe I'll try to pick 3%. Cash in on my 3% and try again. I'm not a very gutsy, risky investor, but I do like to dabble on a small scale, and I just set small goals and safe goals that I feel comfortable with, and I go from there.
My goal of this documentary was to inspire more young adults to start investing. If you're under the age of 18, unfortunately, you can't start just yet. However, you can start learning. I'd recommend taking the personal finance class at Seneca Valley. It has a lot to offer, and I think it would benefit a ton of people. If you're over the age of 18, just remember what Mrs. Kefala said. Never invest more than you are willing to lose. Thank you all for watching.